combining MACD with trends and price patterns. Now that you know how to read the MACD histogram, it's time to take your skills further by combining MACD signals with trend direction and price patterns. By the end of this lesson, you'll know how to confirm MACD setups using the overall trend and important price action. When the MACD and price charts move together, they confirm the strength of the current trend. Rising prices with a rising MACD or falling prices with a falling MACD show that momentum supports the direction of the move. Time for a quick quiz. Look at the price in the MACD chart. Prices are rising, but what does the MACD tell you about the strength behind the move? The price is rising and the MACD is also rising, confirming strong bullish momentum. The price is rising, but the MACD is falling, suggesting a bearish divergence. The price is rising, but the MACD histogram is deeply negative, warning of a possible crash. The price is rising, but the MACD is flat, warning of weakening momentum. Yes, you're right. Exactly. A strong alignment between price action and MACD indicates that bullish momentum is still under control. However, when the MACD 1 and price start 2 moving in opposite directions, a situation called divergence, it signals that momentum may be weakening. This often serves as an early warning that the current trend could slow down, lose strength, or even reverse. Bullish divergence happens when the price makes lower lows, but the MACD forms higher lows. This suggests that bearish momentum is weakening, even if sellers are still active. It can signal a potential reversal where buyers may soon regain control, but confirmation is needed before trading. In bearish divergence, the price keeps pushing higher, but the MACD cannot keep up, suggesting that buyers are losing strength. This can be an early warning of a slowdown or a possible bearish reversal, but as always, further price action confirmation strengthens the setup. Knowledge check. Divergence types and signals. Match each divergence type to the price and MACD behavior it describes. When spotting bullish or bearish divergence with the MACD, make sure there is enough space between the first and second highs or lows, usually at least 10 price bars apart. Markets move in waves, and a full wave between points gives a more reliable signal. If the highs or lows are too close together, it could mean that the current wave is still developing and the market has not yet completed its move. The divergence should also be obvious. A clear lower high or higher low on the MACD compared to price action shows a stronger momentum shift. The clearer and more separated the divergence, the more trustworthy the signal becomes. Time for a quick quiz. You notice the price has made lower lows while the MACD has formed higher lows, creating a clear bullish divergence. The price is now starting to rise after the divergence appears. What is the smartest action to take? Wait for the MACD to cross below the signal line before making any decision. Stay out of the market because divergence means nothing. Immediately open a short position because the price is falling. Yes, you're right. Exactly. Bullish divergence shows weakening selling pressure, but waiting for price confirmation improves your chances of entering at the right time. Time for a quick quiz. You see the price making a lower low, but the MACD is making a higher low. Price has not yet reversed strongly. Momentum is just starting to shift. What is the smartest action to take now? Watch closely for bullish confirmation, like a breakout or strong bullish candle. Open a short position expecting another price drop. Immediately open a large long position. Ignore the divergence because the market is still bearish. Yes, you're right. Exactly. Divergence is an early signal that momentum may change. Waiting for price confirmation helps you avoid false entries. Excellent. You've learned how to spot divergence, recognize momentum shifts, and understand when price and MACD agree or disagree. Up next, we'll have a short quiz to review everything you've learned and make sure you're ready to apply these skills confidently.
What does the MACD line represent? The distance from the zero line. The difference between the two EMAs. Typically 12 and 26 periods. A moving average of the signal line. The difference between price and volume. Amazing. When the MACD line crosses above the signal line, what does it usually indicate? A. Buy opportunity due to bullish momentum. A. Strong sell signal. An increase in volatility. That price will stay flat. Two. What does the MACD histogram show? The total volume of trades. The actual price trend. The distance between the MACD line and the signal line. The size of candlesticks. Amazing. 3. What does it mean when the MACD histogram bars are shrinking? A reversal is guaranteed. Momentum is weakening. Momentum is accelerating. A sideways market has begun. 4. What does bullish divergence look like on the chart? Price and MACD both make higher highs. Price and MACD move exactly together. Price makes lower lows while the MACD makes higher lows. MACD makes lower lows while the price is flat. 5. 5 in a row. What should you do if you spot bullish divergence? Ignore the divergence because the price is falling. Open a long position immediately. Prepare to buy, but wait for confirmation from the price. Open a short position because the momentum is low. Amazing. 6. What confirms a reliable MACD signal? Only a crossover. A sharp move without checking the lines. Just the histogram shape. MACD line direction. Meaningful crossover. And histogram strength. Amazing. 7. If the MACD histogram crosses above the zero line, what does it typically mean? The trend is ending. The market is oversold. Volume is increasing. MACD line has crossed above the signal line. 8. What does bearish divergence suggest? Price is falling, and MACD is also falling. Price is rising, but momentum is fading. Warning of a possible reversal. The signal line is unreliable. Momentum is strengthening. 9. When should a trader act on an MACD signal? As soon as one line moves, without checking the trend, when the histogram touches zero, after confirming the crossover, histogram direction, and price action,